So you want to become a profitable trader. Well, fortunately for you, I've turned thousands of people into consistent winners, so I know exactly what you need to do. And in this video, I'm going to show you how to become a winner as well. We're going to look at what you're doing wrong, how to fix your problems, the right way to view and approach trading, and a simple 4-step process that you can use over the next 12 months to become a profitable trader. We're going to dive straight into it by starting out looking at what traders do wrong. And by far the biggest problem that I see among traders who are learning and aspiring to be successful is that they simply don't know what real trading looks like. And look, I don't blame you. You watch videos like this on social media, making outlandish claims, completely unsustainable or entirely made up ways of trading that simply don't happen and don't work in reality. And this is how you build your perception of trading, and you start to see trading as this crazy money flipping method where you can turn almost nothing into massive amounts of money. You watch people flexing lifestyles and making it look incredibly easy, and you follow what they say because you think they are successful. But I want to put it this way. There's a lot of money in teaching in any area. And I know there is in trading because I make a fair amount of money teaching myself. But these insane claims that mentors make on YouTube help the people that are making them to sell more programs. If someone tells you they can turn $100 into $1 million and they show you proof, well then you're going to buy their program because you think you'll be able to do the same. The more wild claims that someone makes, the more supercars and diamond watches they can buy, because the more people are going to give them $2,000, $5,000 or whatever it is to learn their secret strategy that's going to turn them into a millionaire. And because the people doing this are so caught up in the money and the lifestyle, they're so addicted to it, they give you these insane claims even if it's to your detriment, which it entirely is. It ruins your perception of trading from day one. It fills your mind with unrealistic, unattainable ideas that these people pretended they did themselves, and it messes you up from the very beginning. And I know some people are probably thinking, but it's real. You can flip $100 to $1 million because I saw it. The videos prove it's real. But let's put it this way, right? If we look at the mathematics. This is a 999,900% return. If you did this just 2 more times, which why wouldn't you if you can do it once, you would have $100 trillion. That's 1/10 of all the money, digital and physical, circulating in the entire world, and it will make you 300,000 times richer than Elon Musk. When you look at this math, you realize how obviously fake and made up this stuff is. And there's probably someone saying, oh, but liquidity issues mean you can't do it again. 100 to $1 million's okay, but anything past that and you run into liquidity issues. Look, if you want to live in that dream world, carry on. Just click off this video, go watch a video of someone driving around in a car and doing some shopping, and pretend that you're doing some work. If you want to argue against the reality, then that is on you. But if you are ready to learn the real way to trade, then stick around. Now, not everyone is caught in this trap of social media, right? Even if you understand that all of that stupid marketing is complete bullshit, you still have a problem. And that is that you don't understand what it is that you need to do to win. Because you aren't sure what you should be doing, your focus is spent on the charts. You are married to the charts, trying to force setups to get some excitement, or just get into a trade and try and make some money for the day. This feels productive in the moment because you don't have clear direction as to what you should be doing instead. So you don't study properly, you don't operate with a real strategy, and you trade based purely on hope that your next trade will work out and you'll make a few dollars or a few $100s today. Realistically, whether you make that money today or not, it makes no difference 2 or 5 years down the line. You're still going to be in the same position if you spend all your time just taking active trades without every other important element. There is no method to the madness. So to put it bluntly, you're misguided and you're lost. But it's not your fault and it can be fixed. When you learn about the real way to trade, all of this falls into place. You'll realize that you've been wasting your time, but you'll have a clear set path as to what to do next. And that is what we're covering in this class. So now let's talk about what you need to do to stop losing. First things first, just stop watching those bullshit videos. If you're watching a video of someone doing some shopping, buying a bag, driving a car, whatever it might be, showing off watches, all this stuff, it's not trading, right? Think about it realistically. You're just watching a reality TV show. You're following someone's life. You're not actually learning to trade. You're not learning a skill. You're not furthering your abilities. You're not progressing in any way because you're not watching education. You're watching some lifestyle because it makes you feel good. It gives you a hit of dopamine and it feels motivating in the moment. But it's actually completely counterproductive. So stop watching all these stupid videos. Focus on these boring old educational videos like the ones I make instead. Yes, it's not as exciting, but at least it's going to give you some skills that you can go and further your career with. Number 2, stop trying to flip tiny accounts. Okay, you don't need to turn $100 into $1 million, nor will you actually achieve turning $100 into $1 million. What's going to happen instead is you're going to turn your $100 into a few hundred, maybe even a couple of thousand, then you're going to lose it all and you're going to have no money. So don't waste your time with this stuff. Number 3, you want to commit to doing the actual hard work that is required to become a winning trader. And what this hard work is, we will cover soon, okay? And exactly what this hard work is, we will cover soon in this video. And number 4, you want to stop chasing shortcuts. This holds everyone back, and it is the main reason why almost every single beginner fails and quits before they ever reach success. So what do I mean by shortcuts then? Well, we mean things like holy grail strategies, searching for this holy grail that's going to give you 90% win rates and make you win every trade, things like that. Number 2, trying to flip money for giant fast returns, so turning your tiny money into big money. Number 3, investment schemes, copy trading, and number 4, signals. So let's break down each one of these, why they're bad, and why you need to eliminate this from your focus when you're trying to learn to trade. Number 1 then, the holy grail strategy. There isn't a magic pill. Trading is not about holy grails. There's no strategy that's going to make you win every trade, and searching for it is a fruitless endeavor. The real holy grail in trading is getting your perception right, like you are right now, and understanding that you only need to win 40 to 50% of the trades you take, with a positive return on the winners that you take. That understanding of the probabilities actually becomes the holy grail, but it's not some special strategy that's going to make you win all the time. The holy grail forms inside of your mind and will be fully developed by the end of this class. So searching for the holy grail strategy is a complete waste of time and money. You're not going to find it. It's nowhere out there to be found. So flipping accounts. Now, as I said, this is unsustainable. Don't believe for a minute that someone turned $100 into $1 million. Yes, you could turn 10 into 1,000. Yes, you could turn 100 into 10,000 if you get lucky enough. But the problem here is, and the reason that you can't scale that same result all the way to $1 million and beyond, is because it's completely unsustainable, right? To do these kind of numbers, in order to turn a tiny amount into a very large amount, you have to be trading with massively exacerbated risk and leverage, which means you are basically 1 or at most 2 trades away from losing all of the money in your account. So for example, one time in 1 hour, I turned $100 into just over $1,000. But guess what happened the next day? I lost it all because I was over leveraged. And as soon as you inevitably hit 1 or 2 losing trades, all the money's gone. It doesn't matter if you made $1,000 yesterday, if you've now got no money left. It's all gone, including the principal. It is a complete waste of time and money. Investment schemes. Don't get me started on investment schemes. People saying they will triple your money in 3 days with 100% guarantee, stuff like this. Only beginners fall for this, but it's all complete bullshit. Investment schemes are 99.999% of the time complete scams. You will literally just get robbed, making it a complete waste of time and money. So I want to just quickly explain how these work. Here's a channel with my name and my picture, and this person is offering cryptocurrency investments, whatever they may be. They're pretending to be me. Basically then my audience trusts me, so they go into this group, they think this is me, they give money to this person thinking they're going to get some crazy returns. Doesn't happen, they get robbed. So if you're trying to shortcut by going for investments that are going to double or triple your money with 100% guarantee, it's all a lie. It's all a scam. They're impersonators that do this. They do it for pretty much everyone with a following in the trading space. Don't fall for this stuff, okay? Investment schemes, they're all scams. Copy trading is often the same. And even if you do find a legit copy trading platform, you're going to spend more time and money than it actually returns, which means it's a waste of time and money. It's also going to kill your focus and attention and draw you away from learning for yourself. So don't do this. And signals, I hate signals. It's near impossible to win with them. Most people selling them suck at trading altogether, and even if the person offering the signals is profitable, you won't be because of variables. Imagine they take 2 losing trades and 1 winning trade, and that 1 winning trade wins way more than the losses and is a profitable week. But what if you're asleep when the profitable trade goes out? What if you're in a meeting at work? You've missed it. Now you've got 2 losses, whereas they're having a profitable week, you're losing. So variables make signals incredibly difficult to win with long term. It's pretty much gambling at that point. And once again, they draw away your focus and create dependency on the trader that is providing them to you. So don't waste your time with these. As you can see, all of those shortcuts have one thing in common, and that is that they are all a waste of time and money. Don't put your focus into these, go the hard route instead. They burn your trading accounts to the ground, they steal all of your focus and attention, and they get you locked in what I call the cycle of doom. So here's how it goes. You find a new shortcut. You found a new signal provider, a new investment scheme, a new strategy on YouTube. You're all excited. You think it's going to be great. You think you're going to make a lot of money doing this. This is your key to successful trading. You waste a bunch of time on it. Maybe a few weeks, maybe a few months. You put time, energy, focus, money into this, and then you start to realize this is not going to work. you lose all the money, all the time's gone, you're not getting it back. And then you give up eventually, and you fall back to step one, where you find a new shortcut which you think is going to solve the problems that you've faced so far. This is where you're living right now, and this is why trading feels so frustrating and impossible. So think of it like this. How many times have you joined a new signal group, watched a new mentor on YouTube, tried a different strategy, bought a new course, but you're still not profitable? That's because you're stuck in this cycle where you jump from something to something new, it doesn't work, and then you jump around again. And you just continue going around in this hamster wheel of losses, financial losses, time losses, and create massive frustration and stress for yourself. If you want to win and really get serious with trading, you need to put an end to all of the time-consuming, money-burning nonsense that you've been stuck on for however many months or years it is that you've been trading. And it starts with shaping your perception. So what if I told you that you don't need huge 50% winning months? You don't need to flip accounts all the time. You don't need any of these crazy shortcuts to win. In fact, all you actually need to win in trading, and this is going to shock you, is a strategy that will consistently provide 2 to 5% per month to you. Now, more's better, of course, 5% to 7%, 8%, 9%, 10%, whatever. But if you could make 2% per month, now, most people could do that, right? If you had the right system to allow it, you can make thousands, tens of thousands of dollars per year from your trading. And I know you probably think 2 to 5% is insanely low because of what you've been taught online. But let's put it this way. It's not. 90% of traders make nothing, which means you are in the top 10% simply by making even 1% or 0.5% per month. If you take a look at what some of the greatest traders in history have said throughout books like Market Wizards and interviews, these guys make between 2 to 5% per month. Generally, never any more. Now, yes, they are trading with larger capital, they're trading in risk-averse ways, but why can't you trade large capital? Why can't you trade in risk-averse ways as well? Because 2 to 5%, if you have an account size of $200,000, is $4,000 to $10,000 per month. That's upwards of $50,000 to more than $100,000 a year from your trading with what you might see as measly returns. But these small, consistent percentage returns turn into large quantities of money directly in your pocket. I know you might think, I don't have $200,000. How am I going to trade with that? But capital comes easy nowadays. And it comes as a byproduct of successfully applying a good trading system. If you've got a system that performs well and you apply it well, so you're trading well, capital will come to you. We have companies called prop firms nowadays. They'll give you $100,000 to $1 million to trade with, and you get to keep 70 to 90% of the profits you make. All you have to do is prove that you are consistently profitable. And if you have a good system, this will happen as a byproduct. So even if you've only got $300 to your name today, there's no reason that you couldn't be trading $100,000 next year. And I don't want to bore you with this, but just to show you that it's actually possible, here's just a bunch of traders that I've taught who are doing some pretty crazy numbers, $10,000 per month or more with funded capital. And this all comes just as a byproduct of building and applying a good trading system. That's a hell of a lot of money to come in from trading without any of these stupid shortcuts or account flips or signals or anything of the like. So what I'm about to show you is going to change the game for you as a trader. I'm going to take you deep into how successful trading looks. So what we have here is pretty much the blueprint of becoming a profitable trader. We take the very base elements like technical analysis, risk management, and mindset and psychology, and turn these into something that will create lasting success. I'm going to take you through this from start to finish so that you can see how we build upon each point. So even as a complete beginner in trading, it's likely that you've heard the terms technical analysis, risk management, and mindset. Technical analysis refers to anything related to charts. This is what most people are interested in. It's probably the most enjoyable and exciting part of the trading journey. Risk management refers pretty much to money, how we handle our money, and how we balance the profits and losses from the wins and losses that we take. And mindset and psychology refers to pretty much anything mental or emotional focused, right? Now, these are generally covered on a very surface level way. When you look at videos on YouTube or free courses like Baby Pips, they say, manage your risk, keep your mindset in check, but they don't really talk about how, right? And if we want to succeed, we do need to go a little bit deeper. So starting with technical analysis, if we jump into this, you can see that we have basically subtopics inside of the larger topic. So I've covered things like top-down analysis. It's just a way of collecting more information. So this is a trading style where you would use high time frame, then medium time frame, then low time frame, like using the daily into the 4 hour and then into the 1 hour to find trades. as you can see, this gives you more information than simply trading one time frame. So incorporating things like this into your trading is one of the big steps towards collecting more info, doing better analysis, and winning more trades. Now, the second thing I covered here is technical concepts. Basically, I believe you can win at trading with pretty much any approach, right? You could even win with a indicator combo strategy if you tried hard enough. Although I don't think it matters what technical concepts you trade with, I do think you need to be clear with the elements that you are indeed going to trade. If you're going to trade support and resistance, then trade it. If you're going to trade supply and demand, then trade it. If you're going to trade trend lines or indicators, then just trade it. What you can't be doing is trading support and resistance today and then supply and demand tomorrow, because that shows that you clearly have no system. And what you're doing is pretty much just gambling into each setup. Remember before I said you're trading on hope? Well, that is exactly what happens when you're mismatching these concepts, right? If one day you've got a trend line setup, the next day you've got a supply and demand or SMC setup, basically your problem is that you are unorganized and unsystemized. And that means you can't make your trading repeatable. If you can't make your trading repeatable, well, then we can't bring all of these elements and turn them into this, right? Which is what we need to do in order to succeed. So whatever technical concepts it is that you're going to trade, just make sure you stick to it consistently. And then the final thing I wanted to cover here is trade management. This is pretty much how you nurture a trade when you are in it. So we need to think about things like take profits, where they're going to go, and stop losses, and what you're going to do with these as well. Because maybe in your system, you could move your stop loss to break even when a trade is running in profit. That might be a profitable thing for you to do if you tested it over the long term. But a lot of people don't even consider this stuff, right? The management, because it's not as exciting. We just want to get into trades, right? That's the exciting part. But really, the money is made in actually looking after the trade when we've taken it. So trade management is actually incredibly important. Now, as I've just covered, you can see that when we go through these different ways of improving our trading, the main goal is to make it repeatable and turn it into a system. Right, we want to make sure that we are following the same rules pretty much for every single trade we take, right? There could be slight deviations in analysis, but it's always going to be the same concepts. We're always going to make sure to get the most information that we can, and we're always going to make sure that we have a solid management process. So when we get into a trade, we can get out of it profitably in the future when that time comes. And we pretty much have the same goal when we move on to risk management. We want to systemize things here. So the first thing to cover is risk to reward. If you don't know what this is the best way to trade for long-term success, in my opinion. So risk to reward is classed as a ratio. So your risk to reward here, for example, would be this 1 to 3. This means our risk is 1, our reward is 3, which basically means every time we risk $1, we are trying to return $3 if the trade wins. This allows us to win even if we only win half the trades we take, right? So that means we can be wrong half the time and we can still make a considerable amount of money. Let me show you an example. If we had a 1 to 3 risk reward ratio and we won only 40% of the trades that we took. So 40% win rate, 1 to 3. Let's say we take 100 trades. 60 lose, 40 win. On the 60 that we lose, we are going to lose 60%. So now we have minus 60%. But on the 40 that we win, because we've got a 1 to 3 going on, we're actually going to win 120%, right? So we have 40 times 3 and then 60 times 1. So now we have 120% minus 60%, which is going to generate an overall return of 60% over 100 trades, which means average of 0.6% profit per trade, right? Which means every time we take a trade, we are basically making 0.6%, whether it wins or whether it loses, right? This averages out to create this 0.6% profit per trade, which is an awesome thing to know, because if you can just consistently do this, well, now you don't even have to be right half of the time, right? You can be right only 40% of the time, and you're still going to make 60% every time you take 100 trades. Let's say you take 100 trades over the span of a year. That's a 60% return over the year, which is around 5% per month. A very healthy profit and something to be very happy with. So you can see the next thing I noted on the risk management section is just an understanding of the probabilities. I've just showed you those probabilities, so it's just a consideration of this. The other thing to consider is that you can remove your ego from trading. Now, this also kind of directly correlates into some of the mindset-based stuff. Basically, you don't need to be worried about being right and stroking your ego if you know you can win even when you're wrong, okay? So just understanding these, it's going to be related to the risk reward, the win rates, and then of course, ego related things, as we've just said, right? Get these things right and you will do a lot better. And as I say, this does pretty much link into psychology as well. Now, the final note I've got from risk management is risk per trade. So we want to make sure we are risking the same amount on every trade we take. I like 1%. You could do, at the very highest push, 2%. But you could also do, and I quite like this one as well, say you've got a funded account, 0.5%. That's going to keep your capital safe. Now, the main rule with your risk per trade is just to make sure, regardless of what you choose, you keep it the same, right? Because let's say we go back to that 40% win rate example, but we were mismatching our lot sizes, right? We have 60% of losses, but let's say they were all at 2%. Well, that would be minus 120%, right? If we also had 2% on the 40% of winners, so we were making 6% per trade, well, now we would actually make 240% across 40% of winners. But let's say the 40% was actually at 1% risk. Say we got unlucky. All of our losses were the big size ones. All of our wins were just 1% wins. Well, now we've got 1% times 3, so we have 120 here. So we've basically got 40 trades out of 100 times 3, because they are 1 to 3 trades. We have 120% return. But we have 60 losses at 2%. So we have 120% loss. So now we've done an entire year of trading and we make 0%. Obviously not great, right? So this is why you need to keep the risk per trade the same. Either choose the 1% or choose the 2% or choose the 0.5%, but don't go on a case-by-case basis. Your risk per trade must remain the same for every single trade that you take, okay? So what we've just covered here has once again turned into a system. So now we've got a system for our technical analysis. We have a system for our risk to reward. And we'll just briefly cover mindset and psychology. This is going to cover things like understanding that probability and ego. Also just remaining patient and waiting for trades that are good. Staying disciplined enough to follow these systems that you've created here for risk control and of course for technicals. And then keeping a long-term focus is just about keeping your eyes on the bigger picture, right? We want to make sure we are looking over a 2, 3, 4, 5 year span, not just looking at making a couple $100 today, because that is not going to help us in the long term. So everything that I've just showed you comes together to create a system. This is a repeatable plan that will cover a bunch of different aspects. We've got here mental factors, our risk control systems, our analysis process, the entry criteria we use to get into trades, the trade management process, the backtesting process, the journaling process, the capital management process. So obviously we know what these are, what these are, what these are, what these are, and what these are. But we've also got some extra elements. This is how we validate our trading. This is going to become very relevant soon when I get into that 4-step process. The journaling process is how we improve. So backtesting is where we trade in a simulation, right? We use a software that will allow us to test our systems out in real time using past price data. There is no risk here, but we can collect a lot of information and also build our trading experience as well. Even though we're not trading live, we get to look at hundreds of different hours and days worth of chart price action to understand how the market moves. Journaling is where we track the trades that we take and then we review them. And when we review the trades that we've taken in the past, we get to see areas of improvement. We get to see areas where there will be lots of losses, right? And then we can try and eliminate the reasons for the losses. Now this all together will create your base trading success, but we need to create lasting success. So pretty much everything that we've covered in this area is going to be crossed over and continued onwards. So we will continue to do backtesting. We will continue to do our journal reviews to make incremental improvements. We will make sure that any money we make, we are making smart use of it. So we are going to try and scale this capital. We're going to save and we're going to invest this capital to make sure that aside from trading, we have some money, some wealth, right? You don't just want to gamble it all in trading. It's one way to make money of many. There are better ways to preserve wealth. And this is where that smart use of capital is going to come in. Obviously, I also believe you should continue studying. You don't have to continue studying other people's work when you're profitable. I don't do that now, but I do study my own work. I do study my own charts, my own backtesting, my own results, anything that I can to give me a further edge or reverse engineer things in the markets to try and understand how things are changing and how we can continue to improve based on study. And then the final thing is just accountability. So be real with yourself and stay focused. Okay, that's pretty much it. And if you do all of these things, you are going to create that lasting success that we've talked about. So following on from that blueprint that we've covered, you're probably now starting to see the key to successful trading is through systemization, allowing your strategies and systems to do the heavy lifting for you to balance the profits and losses that you are inevitably going to take. An understanding of the importance of trading systems and strategies, along with an understanding of the math behind successful trading, is exactly what you need to start making massive strides in the right direction towards your progression. You will never become a consistently profitable trader without a trading plan. You need one. I'm going to help you set one up. So we are going to look at what a trading plan is, what a good plan includes, a trading plan that you can use, so we're going to test one together in real time, how to test your plan, it's going to be weaved into that, and how to validate your plan so that you know it is profitable. So first things first, what is a trading plan? Well, a trading plan is simply a systemized list of rules that surrounds your analysis and your risk management, turns it into a process that you can continually repeat every time you come to the markets. And a successful trading plan is going to cover three core elements primarily. First of all is our analysis methods. What kind of macroeconomic or technical concepts will you be using in your day-to-day trading? And what will that look like? Such as top-down analysis, different entry criteria, the actual concepts you'll use, whether that's trend lines, support and resistance, supply and demand, Wyckoff, whatever it may be. And the analysis needs to cover everything from the very beginning all the way through to your management techniques. So will you go stop loss to break even? Will the trades be set and forget? Whatever it may be, it all needs to be covered. Once your analysis is covered, you then need to look at risk management. You need to try and build a process, once again, systemizing your risk control methods. So this is going to include things like what kind of risk reward profiles are you going to look for? Risk reward, for those who don't know, is simply how much are you going to risk to return how much. So for every $1 you risk, you probably want to aim for $2 or more in returns, so you've got positive risk to reward. You pretty much need to build in a minimum risk reward that you're going to focus for. If you do that, then your system edge becomes a lot clearer. If you're going for a 1-to-1 one day, a 1-to-2 the next day, and then a 1-to-0.5, your system's going to be kind of all over the place. You need to put a minimum in place. I recommend 2. We'll look at that in just a moment though. What does the win rate need to be, and what kind of win rates is your system through testing going to achieve? Now, I'll show you how we can kind of work this information out, and we're going to go through from start to finish of building a plan, testing it, and then having a look at the results that it forms. How will you manage your stop loss orders? We kind of brought this in on the analysis method when it comes down to trade management. Pretty much, in a nutshell, just get every risk management concept that you need, risk reward, win rates, trade management, risk per trade, all of that stuff. Try and systemize it as much as possible alongside analysis. The next thing then is just rules. Additional rules that you put in place, things like loss and profit limits. If you lose X amount per week, you'll stop trading. If you make X amount per week or month, you'll also stop trading to make sure you lock that profit in and don't just go and risk it all and lose it all again. How many trades per day, how many trades per week will you allow your system to take? You don't want to be taking 10 or 15 trades a day. Most traders will absolutely not want to be doing that and will lose money by doing that. But some traders do. So building that into your plan, say you can only take 1 trade per day. Well, now you know you're going to take the best trade that day offers. You're not just going to be firing off at every random position. So other guidelines as well fall into place here. We'll take a look at some of these in just one moment. With these elements of a successful trading plan in your mind now, we're going to go over to Notion and FX Replay, which is a backtesting platform. I'm going to teach you a simple trading plan. We're going to take a look at building one together. Then we're going to get into trading it on the charts and we'll see how it goes. Then we'll take a look at the analytics. So let's get to it. All right, so here we've got a base trading plan that we're going to look at today. And we're going to backtest that on FX Replay, which is a backtesting software. So the trading plan, we're covering the risk guidelines and the analysis processes, as we've just mentioned, and this is what we're going to be working with initially. So our risk per trade is going to be 1%. That's going to be static, fixed at 1% for every single trade we take. Otherwise, we get that problem covered actually in the first class, right? So we want to make sure we stick to 1%. We don't want to use dynamic. We don't want to be using 0.5% today, 1% tomorrow, 2% the day after. And I think 1% is a nice central baseline. Loss and profit limits. I've set 2 trades per week as our loss limit. So if we lose 2% in a week, we will stop trading. We're not actually going to see that because we're going to be trading higher time frames, but this would become viable when you're trading multiple assets at the same time, right? We're just testing UJ today. Profit limit's going to be 8% for the month. So if we make 8%, we will stop trading. That way we lock in the profits that we've made and we don't risk giving it back. Minimum risk reward is going to be a 1 to 2. So we will only get into a trade if we have the possibility to risk $1 to make $2 or more in returns, right? We won't risk $1 to make $1. It's got to be a 1 to 2 or we will not get into the trade. When it comes to our analysis process, we are going to stick to primarily the 1 day time frame. Now, you might want to use top-down analysis where you go from the weekly to the daily to the 4 hour to the 1 hour to whatever in your own personal trading. But for this class, we are going to stick to the daily because I want to keep things simple and explain these ideas to you as opposed to getting really deep into a strategy. So 1 day time frame is what we're going to use. We will leave open the potential to refine to the 4 hour time frame if it looks like we need to do that. So for example, if we're looking for a daily area to get in, it's not very clear. We go to the 4 hour at minimum to then identify that opportunity. And our actual step-by-step process will be, first of all, identifying the trend. So are we going up or down? Then we're going to look for supply and demand zones in line with the trend. That's where we're going to enter from. We're going to enter with buy or sell limits, buy limits on demand, sell limits on supply. When we're in trades, we're going to set and forget them, meaning we're not going to alter stops. We're not going to go break even. We're not going to do stop trailing. We're not going to do partial taking. We are going to enter, and then the trade will either get stopped out for a loss or hit the take profit for a return. When we're actually looking for our targets for our trades, where to put our take profits, we're going to use open supply and demand. And if that fails, if we can't find a clear open supply or demand zone to target, we'll then move on to using next swing highs, okay, or swing lows. That is going to be not as great. So that would knock down the confidence scale of trades or the quality of the trade a little bit, not because it makes it any more likely to lose, but because it's kind of the second best to using open supply and demand. And basically, we're not going to be able to extend the targets as far, targeting swing highs and swing lows as we would if we were just targeting supply and demand. But that is the secondary, because obviously sometimes you do need to compromise. So going over to the actual chart then. We got our plan in mind. We're now going to start testing. We're going to do 6 months up to around the start of July. I set this simulation to end. So we're starting on the 1st of January. And what we want to do first of all, obviously daily time frame, that's where we are, is identify the trend. We want to make sure the market's either going up or down. So from the very low of the trend here, we've started to see breaks in structure. These breaks in structure indicate that the market is indeed moving up. They are forming higher highs, right? Market that's forming higher highs and higher lows is uptrending. Taking a look at the significant pullback points then, this is a higher low. We have another higher low here. And then of course we just have the low of the trend here. So the actual trending fashion of this market starts pretty much come down to this point. We have this low, higher high, higher low, higher high, higher low, higher high, right? That's what the trend looks like pretty much from where we are right now. We can kind of pull from this that we are in an uptrend because unless the market breaks into this low, it's going to continue forming higher highs and higher lows, right? So we are in an uptrending market where realistically, we then want to be looking for buys. Generally, what we'd want to do to kind of increase the probability of winning trades would be to kind of wait for some of these smaller daily structure here to break. So for example, if we were to see the market come and close over this low or high, that would then shift the daily here, so this daily trend, into an uptrend alongside the larger daily trend. So if we got this movement, we would then follow out the system by looking for our demand zone, and then we would look for a pullback to buy from, okay? So then that's where kind of our trading would begin. And if this doesn't happen, obviously we are in a demand now, so it seems quite probable. Uptrend, demand zone, all good. But if that doesn't happen and we get a breakdown, well then what we would do instead is just follow the existing bearish daily structure because we would then anticipate that this market is changing direction and starting to move lower, okay? Let's run this forward a little bit. Initially, obviously, not going to really know immediately. So the first thing we note here is that we have had a push and break over that high, but it is just a wick right now. So what you could possibly do is look for pullbacks and buys, but because we want to make sure that the trending structure is moving with us to pretty much the most favorable degree possible, we would prefer to wait for an actual proper closure above this high. So if the market did this, then we could look for our opportunities to buy and continue the trend, okay? So running this forward a bit, there we actually have a closure. We've started to see significant momentum moving. So what we could actually do is use this demand potentially for a long opportunity, right? This is something we could keep in mind now that we've had this push and break. So this here has actually closed over this previous high. It hasn't closed over this wick yet, but it does provide the closure that we needed to see past the previous high to start validating long opportunities. So if we were to get into this trade, we have buy limit as our entry method, stop beneath the low, and then we want to target open supply zones. So that would be our open supply there, 146.907. That, of course, however, is not a 2R trade. So if we try scaling in the stop loss to as close as possible, that's going to be a 1.8%. This is where we could potentially start looking at, is it possible to refine onto the 4-hour time frame? So I actually do see slight opportunity here. This gray candle, so I use last candle before the impulse for my supply and demand zones. This gray candle is the last candle before the impulse. So we could actually go ahead and use the 4-hour refinement like this. We could have our stop loss under the low still for the daily. We only really want to use that 4-hour for refining trades. Past that, we are back to the daily. And this would provide us with a 3.37% trade using 4-hour entry, buy limit on demand, stop loss still under the daily low, target into the next daily supply, right? So there. So now what we'd want to do is just place our order, which we can do because we're using a simulator. $2,000 risk, that's 1%, $6,700 potential return. We want to use a buy limit. So let's throw that on there like that and see if this trade gets triggered. So as you can see, we reacted from the daily demand, not the 4-hour. So we can go ahead and remove this now because the target's already been met. When the target's been met like that, it's unlikely the market is going to come and pull back for us. So what we're going to do from this point onwards is just move on to the next opportunity. Nice and simple. Obviously the daily would have been okay, but the risk reward was simply not good enough to take that position. But what we have had now, taking a look at this, is a closure above this supply, which pretty much opens doors to this supply up here. We know now that this is a bullish trend, right? We've got actually an extreme supply at the top. And because we're expecting this market to move into an uptrend, remember the bigger daily picture, we are looking for new highs to be formed. We'd say this target up here could be a very nice target for us to trade into if we get an entry, okay? So what we could actually do at this point, if we take a look at this, we got daily retest, daily retest. We could look at this candle here. I just like to use last candle before the impulse. Now, obviously, as we can see here, we have pretty much consolidation and then we impulsed away. So that's where I'd personally, at the moment, like to use for my trade entry if the market pulls back to this level. And then if we form any other areas after that, well, then we'll work with those instead, right? But for now, this is a good little trade. So I'm going to go ahead and place an order. And then we'll see what the market gets up to from this point onwards. See if we can get a tap in here. Okay, so we've been tapped in. We're now at risk. We've got 2.6% or 2.6% potential return. Take profit then would be a win. Stop would be a 1% loss, which would be $2,000. But we've had a very nice reaction so far, tapped into demand. We're starting to get a push up. Now, remember we said we are set and forgetting these trades. So we're not going to do stop loss management, which means there is possibility of it flipping on you, but that's just how it is, right? There we go then. We followed through towards the target. That's going to be trade number 1 that actually got triggered. The first trade would have been nice too, but the risk reward wasn't good enough. Hindsight, could we have continued it through to where we are now? It would have been good, but we didn't know that at the time. So targeting that nearer supply was probably a good move. So there we go. Taking a look at the realized profit, we're at $5,000, but we are towards mid-Feb. So with a daily time frame system like this, where you're using daily and at lowest 4-hour, trades are going to probably come around about once a month per asset, right? So Euro USD might get one trade, UJ might get one trade, GBP USD might get one trade in a month, right? So you're probably looking at trading 4 to 5 different assets and then seeing how you perform, basically averaged out, because it's going to be a very low frequency trading style. We've taken one trade here and we are pretty much just a month and a half into the year, right? I'm fine with that. I think that's fine. But you just got to keep in mind that when you are trading higher time frame stuff, there is that possibility, okay? So it's not going to be super high frequency. Right, we're going to leave that on. If we take a look at what we've got now, then we had a push up from this demand. We had a push from previous demand. Then we've had a push from this demand. So just here, last candle before the impulse. So this could be a good point for us to buy from for a next potential trade. We're in an uptrend. We're continuing that. I guess what we should probably do first is see how the market comes in about this high. I do think, to be fair, we're in a clear uptrend on the daily, so targeting, now that we've started pushing with some significance, targeting just continuation of the highs in that larger daily trend, this daily trend here, would be wise, and I think this would be a nice opportunity to continue buying. But we're going to see if a nice clear supply zone opens up for us to potentially target for a position. So see, because we're daily time frame trading as well, we are going to be waiting a while for trades to form. So just this range here is about 2 weeks of trading, right? Where we haven't really done anything except go sideways. So you want to obviously have a collection of different assets to pick trades from if you're going to be swing trading like this. If you're day trading, you can sometimes work with just 1 or 2 different assets because you're going to get more opportunities. So we're going to target the swing high for a long here. I'm still liking the idea of longs. I think everything's adding up towards that. This trend is now bullish, in line with the larger daily trend being bullish. Swing high seems a clear target. If we had another supply to target, we would do, but I don't see one right now. So we're going to place this order and just see how that goes. UJ, obviously, when we take a look at this price action, has been a very clean trending market. We could even see previous examples where these same setups will have worked multiple times, right? We have demand, come back, retest demand and push using some of the more internal structure. Here, demand, breaker structure, blah, blah, blah. There's so many setups that we could have taken using the past price data here with this exact system that we're looking at now. Because it's a strong trending market, we could pretty much presume it to continue working quite nicely here. We've been blessed so far. This is a nice movement. First trade was a nice movement. This is like 2 trades. I mean, let's see how this goes. We do have set and forget rule. Generally at this time, realistically, I would be making dynamic exits, so I'd be getting out of that trade as opposed to leaving it just to catch the 1 more pip. But we've let it go anyway, follow those set and forget rules. That's a 3.64% win and a 2.62% win, which on a $200,000 account, which remember you can get these funded, is a $12,000 return. Okay, very, very good stuff. Now, presuming we are pushing to new highs, we may be able to just follow the same exact format again for a new trade. So there's a couple areas we could look at here. We can look at a full, complete pullback towards this area. And then the other thing we could do, because we've just pushed, formed a range, and then this new demand here has pushed a huge surge upwards. We could also look at kind of this area for potential setups as well. Let's just have a look how this price action goes. So with the market rallying this much, it may be wise to start following the trend a little bit closer. This area here, let me explain this to you, just a little lesson on supply and demand. Basically, because we reaccumulated here and we failed to break a high, then we had this huge surge through the high. This area here that we've marked out has significant demand and significant buying pressure behind it. Otherwise, it wouldn't have made such a huge dramatic movement like that. Basically, because it was slow, then it bombed like this, it shows us that this area here saw massive levels of institutional buying or significant large orders on the buy side. That is what we're looking for when we're looking for supply and demand, right? We're looking for significant buying and selling. If you really wanted to refine this down to its purest demand zone, it would be there. But as I did with the previous setups, I prefer to just keep the daily low covered. This would be an idea of a setup. As of right now, we need to see. Maybe we formulate a little bit higher, but I do think this is going to be a good point to work off of. We consider what we've seen here as well. We have this high, higher low, push up, higher low, push up from the larger perspective. Because we've got such significant momentum here, I think buying from these areas becomes a little bit risky. I think we could potentially then go for this. Targets wise, a little bit tricky. Realistically, targeting new swing high would be okay. And then obviously what we've got here is if this trade does lose, so if we were to get stopped out, we would look for a pullback towards this area, and then we could buy from there. Or what we could do to be safe if we wanted to, because obviously we don't want to stack losses, would be follow up this loss with, see how we got that confirmation style trade here? So we waited for the structure to shift and then we started buying. We could do that same thing inside of this area if we fail from this top zone. So we take one loss, but then we limit ourselves from taking 2, 3, 4 losses if the market keeps crashing through demand zones. We can continue with the trend. And if this fails, shift into that motion. So this trade's also got incredible risk reward. Once again, no clear supply, but we are in a very visible uptrend. We have this nice demand zone retest. We can buy from there. Stops under the daily zone, 7.35%, which would be a $14,000 return if this trade works. And then if it loses, we may even have better risk reward from this low point, providing we get the reversal confirmation that we would want to see. So did we get tapped in, or was we missed on spread there? Yeah, we are in currently. We have to set and forget this trade based on the rules. Very, very pinpoint entry there. Basically, pretty much what I explained. This is an area where massive new buying has commenced. So obviously a pullback down and retest of that level is going to be a pretty favorable point for us to start continuing higher. There is opportunity for us to break lower with the areas of imbalance that we've got. If that happens, that is fine. Well, we've got a very strong trending market here. I was going to say it would highlight the obviously different ways of approaching the system, but with such a strong bullish market, we may be okay to just fill the target. So we'll just run it through. And there we go. So this one again is a win, and that brings us to pretty much the start of July when our simulation is going to end. So with UJ, with this system, if we take a look back at the rules, daily time frame trend, buy from imbalanced demand zones, target imbalanced supply zones. Failing the imbalanced supply zones, if we can't find one to target, we would then target swing highs, right? This would also work on the sell side. If we had a bearish market, we'd be selling supply, targeting demand, or targeting swing lows. So that is a very, very, very simplified form of a system. Now this one, obviously, 6 months, 3 trades, 100% win rate. You're not going to get 100% win rate with this system, I promise. Okay, this is only 3 trades. It's a small sample. Not all markets run like this, as I'm sure you probably know. So I wouldn't get super excited about having a holy grail strategy here, because there are going to be different results on different pairs as well, okay? If you're not in such a strong trending market, obviously a daily trend following trading system like this is not going to perform so well. So what I'm going to do is I'm going to go back test Euro USD, and we'll take a look at the combined results of these 3 very nice trades paired with whatever we get on EU. We've piled the analytics together just here. So we can see the total profit and loss made through these 2 tests, the same 6 months, the same trading system, was $46,000. Now, one thing to note, the account balance says $446,000. This is because I ran 2 different tests, both with $200,000 each, so it's compiled them together. But realistically, this would have been traded with the same $200,000. So the total account balance is generally 246, meaning it's around a 23% return, okay? Now, from what we can see by compiling these 2, we took 10 trades, 7 won, 3 lost. As I said in the USD JPY example, that was an incredibly clean trending market, which is pretty rare. We don't usually see that, which is why I went ahead and tested Euro USD as well. The price action on Euro was a little bit more choppy, so we actually got around a 60% win rate on that one instead of 70. I'd say that is probably more accurate because eventually this UJ trend will come to an end. You're going to have the choppier markets to work with. The majority of other markets aren't as clean as UJ, so this probably wouldn't be a 70% win rate. It's going to be closer to, let's say, 55 to 60% based on the information we've collected so far. But we can see even then, that's positive, and our positive risk reward is actually going to make us win, even if we were losing, for example, 70% of the trades we took. 3.72 will keep us afloat, okay? So, obviously, being a daily chart system, this is a very low frequency approach. We traded 6 months of data on 2 assets, and we only took 10 trades, which is pretty much just under 2 trades per month, right? That's fine. If we added another asset, that might add to that again. We may have 15 trades over the 6 months. You could trade up to 4, 5, 6 different assets with a system like this because it is so passive and easy to do. A 23% return in 6 months is very, very good, especially when we have such a strong win rate of 55 to 60%, if we were to disregard, of course, the 100% win rate of UJ. And the average risk reward being so strong at 3.72, meaning every $1 we risk is, on average, bringing back $3.72 in profit. So let's take a look at some of the information we want to pick out of our back tests and our data collection in order to build a positive trading plan and make improvements in the right direction. The first thing we need to know is, what is our win rate? Obviously, this small sample size, we're going to call this around 55% to kind of suit the 60% more so on Euro USD. I always like to be a bit more pessimistic as well when we're forecasting kind of how a system can do. The way around with this would be to just collect even more data. You could do another 18 months of data on this system. That's going to kind of average that win rate out to something a little bit more viable to work with, because you'll have more trades in your sample. But I'm not going to do that for this video. You can do that with your own systems when you get to doing this yourself. So we want to know our win rates first of all. We then want to know our average risk reward. We want to know how often trades are coming around. For this, it's around 1.8 times per month for 2 assets. If we add another asset, it might go up to around 2.6, whatever. Then we want to know how big our average winners are. We already know that from the risk reward. Average win is going to be around 3.58%. Our average loss, minus 0.93. So we're containing those losses to under 1%, which is very, very nice. Another important thing you need to know, I'll explain why, is the average duration of winning and losing trades. So we know that a winning trade is going to take on average 16 days, which is just over 2 weeks. It's going to be 2 trading weeks, 2 sets of weekend, and then 2 more trading days as well. That's fine, because we know that this is a very passive, easy system. So if we know this, we actually can give the patience to our system to allow these trades to play out. Because one place that traders go wrong quite a lot is they start panicking after a few hours in a trade. I need to get out. It's not moving as fast as I want it to. But when you do your back test and you realize, okay, this trade's actually going to take 2 weeks in order to reach a profit, now you can give it that 2 weeks with confidence, knowing that on average, that's how long your system's going to take in order to pay you out, okay? If you've no idea how long your trades take, then it's very, very easy to get stressed out after a few hours or just 1 or 2 days. If you know that your winners are going to take this long, it's easier to let them run. We see our average duration for losses is half the time. They lose in about a week. But even then, we should be leaving these trades for about 2 weeks anyway to see if they can pull through. We should give them the patience to do that. And I'm not saying that you need to be trading for 3 weeks, right? You can do all this system application on a much lower time frame, like the hourly and the 15-minute if you really want to. But I'm just showing you the highlights here. So we're looking for win rates, we're looking for risk reward, we're looking for how often trades are taken, and then we're looking for how long those trades take to either win or lose when we are in them. Some other important information you can pull from your system, yet not quite as applicable to a swing trading strategy like this, would be, number 1, where are your trades taken? Where are the max risk reward trades taken? Where's the most money made, basically? We see here it's a New York session across the board, right? For a swing trading strategy, this doesn't really mean much because we're holding trades through multiple sessions every week. But when you are trading on a day trading perspective, it's good to see which is your most and least profitable session, because then you can start putting more focus into London, for example, and eliminating New York if that's unprofitable, or the other way around, whatever it is that your data provides. Same here, performance by time. It's non-applicable to swing trading. It doesn't matter when we get into trades because they're open for weeks anyway. But if you're day trading, once again, all you would want to do here is say, okay, well, maybe this time, 7 to 10 a.m. early in the morning is incredibly unprofitable for you for your day trading. Whereas let's say 12 to 1 is hyper profitable. So now you want to tailor your trading to try and find executions around this time at the start of New York and eliminate London. And you're probably starting to see now how we get that base plan like what we built and turn it into something more personalized and more impressive with stronger improvements and better performance long term, right? We're getting this info, we tailor it, we repackage it into a new approach to the system, and then we test it again until everything is optimized. Now, as we said, this system did 23%. Obviously, as I said here, because the start balance is classified as 200,000 plus 200,000, it thinks we're trading with 400,000. Realistically, that would be the same $200,000 across the board. So we're looking at around a 23% return in 6 months of trading, which is brilliant, by the way. We have around 3.4% in Jan, 6% in Feb, 3% in March, minus 1% in April and June, and then around 12 or 13% in May. Now, this is obviously a pretty good distribution. We have mostly positive months. The losing months are very small at 1%. The winning months are considerably larger than that, right? 3%, 6%, 3%, 13% almost. So that makes for a very nice distribution where we are majority profitable. And as we say, if we added more assets in as well, some of these losses would probably go away too, because we are going to hit those larger wins, right? So let's say in April we took the 1% loss, but say AUDCHF, if we bought that in, may have taken a 2-3R winner. That would then obviously overcome that loss. So as I say, we do have a pretty limited sample size here, but you're starting to see how these things come together and how we want to look at this data. Now, one thing I want to show you is this. It's a Monte Carlo simulation, and I'm pretty happy because I didn't even know this was in FX Replay. I was about to go to another website, and then I realized that this is here. So what this does is actually present to you whether or not your system is profitable or not. So if we were to run this information with the $246,000 start balance from where we are now, our average gain is just automatically calculated. It's around 3%, 3.5%. Our average loss is 1% at $2,000. Let's say we take 100 trades on this system. We'll run 5 different simulations. If we were to run that simulation, it's going to tell us the worst, best, and average outcome, okay? We could even do 10 simulations to get a larger average idea. So we can see the average balance after taking 100 trades, which is going to be a few years of trading here, would be $691,000, which is about $450,000 more in profit than what we actually have got at the start point. Best case scenario is going to be at 750. Minimum balance is going to be 608. So even if we performed as poorly as this system could possibly perform, we would still make a considerable return over 100 trades, okay? Now, as I said, I don't think this 70% win rate is considerably accurate because it will go down, right? It will go down once we have a larger sample size. We're not going to win every trade on UJ, I promise. So we're going to call it 50%, just to be a bit more pessimistic and a bit more realistic. This is then going to give us the ideas over that 100 trade sample. The average balance is going to be around 520K, max 640, minimum 430. And what we're really looking for here is an idea as to whether a system is viable or not. Now we can see here with a minimum of 100% return, that's the very worst case, by the way. This rarely ever happens. You'd have to be crazy unlucky to hit that and crazy lucky to hit this. The average is going to be around where you hit. So anywhere from 500 to 550,000 is probably a good baseline for this long-term test, right? And this also compounds, doesn't really include withdrawals. So that's something to factor in as well. But really what we're looking for, is this system profitable? Is there opportunity for it to lose? We can see with a 50% win rate, no, this system is going to win, okay? There's no way we can really lose in this system. Yes, we'll have drawdown, but we are not going to actually be losing money over the long term. If we drop the win rate to 30%, let's take a look what that looks like. Now, this isn't quite so good, right? We can see the worst case outcome. Generally, over 100 trades is going to be positive, but there is possibility. Let's actually jump this up to 40 simulations. We may start to see some going negative. Yes, as you can see, if we look at a larger average, or for example, if we looked at more trades, you'd see that, okay, more trades kind of fixes the issue, but some of these go pretty negative before they start to pull back positive, okay? So if we drop it to 20%, I think that's going to ruin the whole system based on our risk reward. You start to see, yep, we are now pretty much moving down. The only way to win in this instance, it's possible, but would be pure luck. And you're not going to perform well trading like this over the long term, okay? So this simulator here is really solid for working out what kind of win rates and stuff you're going to need and the averages that you can expect to achieve on your system. So from what I've showed you, you understand the importance of building out a trading plan, and you're starting to see how this can absolutely change the game for you. If you build out a plan like this and then you apply it in a tested, simulated scenario, you can start to build experience, build information, and understand how to better your systems. It will give you a good idea as to whether what you're doing is actually going to be a profitable long-term approach to trading, and if not, you can fix it, and if it is, you can improve it even further. My guess is you probably haven't done any of this. If you have, congratulations, you need to do more of it and you need to do it better. But if you haven't gone ahead and done some backtesting, you haven't tried to build a trading plan, it's fine if you didn't understand that this was a thing, but this is the most important element in trading. Now you can stop trading based on hope like you are, and you can start looking at some of this very important information that our systems show us when we test them like we have in this video. So you need a systemized process rolled into a trading plan that pretty much automates inside of your mind the risk management and all of the technical and fundamental analysis processes that you will be using to find your trades. Entry criteria, exit criteria, trade management, risk per trade, risk rewards, all of that stuff. It needs to be systemized into a trading plan, and that is how you are going to reach success. So now we're going to continue along this journey that we've been taking. I've helped you to uncover a new perspective on trading, and I've showed you how to develop a validated system. Now we need to look at how to build your skills and experience without risking loads of money so that you can get funded with $100,000 or more in trading capital and start becoming consistent in your trading. We talked about all of the different shortcuts that hold traders back, like signals, account flips, copy trading, and generally holding a short-term focus. But if we want to win, we really need to eliminate all of this stuff, because all it does is cost us money, time, and focus. With all of that stuff gone, to succeed, there's only really one solution, and that is to slow down the pace that you're trying to win at, because rushing is causing you to make loads of mistakes and waste your time looking for the fastest way to success. You need to go back to the beginning, back to basics, and commit to every step of the following 4-step process that I'm going to teach you in today's class. And that framework is what I call the LTVE trading model. Now, this is no crazy magic pill. It simply stands for learn, test, validate, and earn. And this is the process that I believe you should take in your trading. In fact, from the amount of people I've taught that have reached success by following this system, I believe it's undoubtedly the best way for you to reach success as well. Before I cover the 4-step process, I just want to refer back to these worries that you might have. You might think, I don't have any trading experience, so this probably isn't going to work for me. Or, I've tried everything else and that hasn't worked, so how will this? But the reason that this framework is so insanely effective is because it's pretty much a hard reset on your brain. So if you're brand new to trading, it's fine. You can follow this process from day one and avoid all of the losses. Chances are if you're watching this, you're not brand new. You've probably been stuck for some time. But if you follow this 4-step process, it will begin as pretty much a hard reset on everything and all of the bad habits that you've learned up to this point so that you can move forward successfully. So you can do this even if you've got no experience or only losing experience up to this point. And if you follow it all correctly, you'll come out the other side with 5 or 6-figure results and the capabilities to turn trading into a full-time career, which I'm sure is your goal. So here's exactly what we do then. First of all, we are going to learn a particular strategy or approach to trading that fits around our lifestyle. So you need to decide whether you're going to be swing trading or day trading. So here's exactly what we do in 4 steps. First, we learn a particular trading strategy or approach to trading that fits around our lifestyle. When we've done that, we move on to collect data on the systems that we learn and get familiar with them by testing with past and present price data. After that, we validate the success of these systems and our general approach to trading. And once we've done that, we can finally go on to actually see the reward for our work. We can earn by using these systems to acquire funded capital and leverage that capital for profit. And this is why I believe this is the best way to trade. You don't have to lose thousands on the learning curve. You might have already done that, but you don't have to lose thousands more. You don't have to invest thousands of dollars of your own money in order to achieve great returns because you'll be working with other people's money. You don't have to spend 10 hours a day on the charts, wasting your life away, achieving nothing in return. And the whole process is systemized to ensure your success from pretty much the day you begin, which is going to be today. All things considered, this beats pretty much anything else out there. And now we will cover all 4 points of the 4-step process to building a successful trading career in the next 6 to 12 months. And if you remember back to earlier in this series, I told you we only really need to achieve 3 to 5% per month. Let me show you the math behind that. If we're trading with $100,000 in capital, which you can get hold of for literally as little as $500, that's $3,000 to $5,000 per month in average income. Bumping that up to 200,000 and you double up to 6,000 to 10,000. And if you're trading with 300K, well, you can make 9 to 15,000 a month simply by achieving 3 to 5%. Small, consistent returns. And of course, trading is not smooth sailing, so we do need to account for profit splits and losing months. They will knock the profits a bit, but you're also going to have bigger months, right? It's variance, deviation. One month may be smaller, but another may be much, much bigger. And once you've completed this 4-step process, your career will naturally scale up. So these numbers can keep growing along with your personal skills, experience, and progress. It's a naturally scaling career. So now let's actually get into this 4-step process. Make sure you listen carefully to everything I say from this point onwards, because I'm going to be teaching you exactly what you need to do pretty much quarter by quarter over the following year. And if you do everything I say, you will win. So let's get to it. Step number 1, learn. And it's not only charts that you want to learn about.
Mindset, risk management, macroeconomics, and pretty much everything else need to be covered here. So start reading up on news and how it affects markets. Make sure that your systems incorporate risk management, and also take a look at some books and make sure you're consciously aware of the psychological sides of trading. If you fail to get yourself properly educated on every single topic, it's like you're deciding from day one that you want to lose forever. And now when it comes to the systems, so the risk control and the technicals, I suggest you choose a mentor, whoever it is that resonates best with you. It doesn't have to be me. Whoever you find the most beneficial to your journey, choose that mentor and eliminate everyone else. In trading, taking what seems like the slow route is actually usually the fastest route to success. So when you stop focusing short term and you eliminate those signals, copy trading and all of that stuff, and instead focus on just learning from the ground up, you'll actually reach success a lot faster than those who don't. Now, the reason I say you should just choose one mentor and learn from them is conflict. So I trade concepts that look very similar to those of many traders nowadays. We all use similar stuff, but we use things in different ways. So my system may look very similar to someone else's, but there's specific intricacies like the way we mark supply and demand, the way we use imbalances, the way we find our targets and our actual entry models, they can be very different. It's actually the big reason that self-taught traders fail, usually forever, and if not then, usually for quite a long time, because they are trying to take information from here and cram them together, and it just doesn't work. So whoever the mentor is that you've taken the most value from and that you resonate with the most, choose them and learn your systems from them, not someone else. Don't go nitpicking online to try and find a little bit of information from this person and a little bit of information from this person, because they just won't add up. When I say this, I am directly referring to macroeconomics, technicals, and your actual trading strategy. When it comes to different risk control ideas or psychological based stuff or career progression based stuff, you can take that from anywhere because you can layer that value onto your trading system. But just make sure you stick to one person and one source and one system when you're trying to learn an actual strategy. Now on to step number 2, test. I actually showed you previously how to do this using backtesting software. And when you get this right, you'll make money live 10 times as easy. And the big question we want to answer before we start testing a system is, does your system or strategy cover every single element of trading? Mindset, psychology, macros, technicals, all of it needs to be covered. So inside of your trading system, you need technical analysis, fundamental analysis, entry methods, trade management, profit taking, contingency exits, so stop losses, trailing, things like that, and journaling, as well as mental management. Because trading in a simulation allows you to collect years worth of data on the performance of your approach in just a few weeks or months, in just 1 to 2 months, you can make 2 to 5 years worth of progress and experience building, which is why this is so much more beneficial than demo trading. You get to determine the viability of your systems way sooner, therefore you can start making money sooner. An awesome byproduct of testing alongside determining the viability is that you get to use your data to eliminate weaknesses. We're not just talking about the concepts that you use to find trades. We're also talking about entry models, exit criteria, how to manage trades when you're in them, as well as all the other stuff like risk control, risk to reward, probabilities and win rates, all of that stuff. See, trading is about having an edge. And all of these things come together to create your edge. If one of them is missing, you're missing a key piece of the puzzle, and you're probably not going to win for too long, even if you have a good run for a few days or a few weeks. Once you have every element of your system dialed in, it's time to test. And you do this using a backtesting software like FX Replay. I showed you this in the previous class. There's a card somewhere at the top of the video taking you to that. With this software, you can actually trade past price action and collect massive amounts of information before actually then going forward to the live markets. Now, doing this will give you years worth of data, market experience, and a deep understanding of your system a lot faster than if you try and do this on demo. And the sad truth is, 9 out of 10 traders skip the testing phase altogether. It's so rare when I talk to a trader that they actually put in the time to backtest. Which means that 90% of traders have literally no clue if the strategy they're using can actually make money. And I want to show you an example from someone that I taught who followed this system to succeed. So to begin with, he was strategy hopping, looking for quick fixes and altering his strategy based on information he found on random mentors YouTube videos. And this held him back from winning. He had information overload. When he committed to the learn and test phases, he carried out a full year of backtesting using the systems that I taught him. Since then, he's acquired multiple funded accounts and achieved multiple payouts. Now you'll see some of these certificates are pretty old now. But check this out. He's actually still getting payouts consistently. Just a couple of weeks ago, before making this video, he posted this with 8 months of payouts in a row. So you can see there the importance of making sure you take the time and energy to test your systems before you start trading them live. Most traders don't, and it is literally the reason why most traders fail. It's probably why you're losing now. You're misguided, you've got no system, you're kind of guessing at every trade, everything's a gamble, and everything's based on hope. Because it's a probabilities and statistics game in reality, that is what we need to focus on. And without probabilities and statistics on our side, we are not going to win long term. So get that testing in, make sure you put in the work. I know it's not as fun as live trading, but it will set you miles ahead. And I promise when you're making money with trading, because you tested, you'll find that fun indeed. So now on to step 3, validate. Do you know what the expected return of your system is, month by month, quarter by quarter, year by year? If you don't, why are you even trading? See, to make money consistently, we need to know that we have a valid system for doing that. So validating is the final step we have to take before we get to the good stuff, the funding, the profit, and the actual career. The funding, the profit, and the ability to quit your 9 to 5 and trade as a career. So what exactly is this validating stage then? So validating is actually just a skill transfer process. Once you've done testing, you will have a good understanding of the statistics behind your system. How often you win, how often you lose, your average risk to reward ratios that you achieve on winning trades, how long winning trades take to play out, how long losing trades take to play out, the best time of day and the best day to take trades, and all of this information. Backtesting, however, has one major problem, and that is that it doesn't bring the psychological implications that live trading brings. There's no money on the line. You can fly through testing really quick, which is good in a sense, but it also means you don't have to be patient while trades play out. And if you're missing the patience, the discipline, and the ability to handle stress in real-time scenarios, well, even the best system is probably not going to be applied properly when you take it to the charts. So what we do in validation is take our systems over from the testing stage onto small live accounts and demo accounts to put them into action in real time. So validating is where we build real life experience trading the markets with our tested strategies. And the goal inside of phase 3 is not to make money. So if you're trading a small live account, don't worry about actually generating meaningful profits. The goal here is to master your system and to master yourself. And when you do this, you can move on to phase 4 and you'll make a lot more money there than you will here by wasting your time chasing short-term returns. So how much of this validation, this demo and small live trading do I suggest you do? Well, realistically, you only need to do 2 to 3 months. And if that is successful and you have 2 to 3 profitable months where your system was applied correctly, you can move on. And if you mess up this 2 to 3 months, well, then you just do 2 to 3 more until you hit your goals and actually apply your system successfully to the real markets. And I know some of you might be thinking 2 to 3 months is too long. I need to make money now. But if you rush this process, you'll be stuck losing, blowing accounts, failing evaluations, throwing away money, and wasting precious time. As I said before, the slow route is the fastest route to success. So by this point, you're probably starting to understand that all you need is the right system, the right guidance, and just 1 to 2 hours per day to actually apply these systems. To go through that learn, test, and validate stage so that you can move on to earning and actually making money from trading. And absolutely anyone can do this. It's going to be hard work, and it's not going to be as fun as active trading. But I promise a few years down the line, when you're making significant money from trading consistently, it will be very fun indeed. Now, I already showed you some results from traders who use this system, but I'm going to show you more to keep you motivated and make sure you understand that this can work for you. You are no different to the people who we're seeing win here. And all of those traders I just showed you did this by following this simple process of building a skill set and then leveraging the opportunities that we have at our disposal today, which we'll cover now in step number 4. Earn. The final stage, earning. This is where things get interesting, and it's where you start to see reward for the work you've put in up to this point. If you focus in on the system that I've given you today, there's no reason that you can't be at this point in 9 to 12 months time. And look, I know that might sound far off for some, but realistically, it's very close. And if you're so short-term focused that you think 9 or 12 months from now sounds very far away, I promise you, you are going to lose forever. So just get your mindset right and be patient. So in the earning stage, what we want to do is start utilizing our skills and leveraging things like prop firms, which are companies that will lend you money to trade with, or not lend it you, they will give you money to trade with, and you get to keep between 70 to 90% of the profits.
All you have to do is pass an evaluation to show you can make money without losing a lot of money. And if you do this, they will give you the capital to trade with. You only need to put a tiny amount of money down, i.e. around $500 to get access to 100,000 in buying power. And you can scale up and leverage from there. So regardless if you're super broke or super rich, I think prop firms are probably the best way that you can enter into the markets to mitigate risk, keep that risk down, keep your own money safe, but also leverage your skill set to make multiple $1,000s instead of just making $10 or $20 here and there trading on small accounts. Prop firms are going to be a good choice for two reasons. A, you simply don't have the $50,000 minimum that you're going to need to make any reasonable returns trading, because realistically you are going to need that much if you want to make a career out of this, and that is the bare minimum. Or B, if you do have a bunch of money, well go you, but there's no point risking it when you can make the same returns with someone else's money without bearing the risk of losing all of your own. And when you have the funded account, you just continue to follow your validated system and watch the money roll in consistently month after month, albeit of course with some losing months because that's just how trading is. This is where we see that natural scaling begin, where on month 1, you can start with a smaller account, but a bit down the line, that account may scale, you may get more, and you can do the same work to generate larger returns. And as the years go by, this will continually compound. If you follow this framework that I laid out for you today, the potential will open for you to achieve $10,000 months and beyond. And I know that sounds crazy, but we do it all the time. These are just some of the results that this system's achieved for others. We've got $10,000 here, $4,000 there, $6,000 there, $20,000 there. So the question becomes, how do you get results like this? Well, I should hope by now the answer is becoming pretty clear. You need to put this 4-step LTVE system into action in your own trading. First, you need to learn a trading strategy from someone else, or you can build one yourself, but that will take a lot longer. Then you need to test this system using backtesting software to collect a few years of data and understand whether or not this system works. Once you've done that, you should then go on to validate that system by trading it in a demo and then a small live account. And once you're doing that profitably and you've transferred those skills over from a very base idea into actual consistent results with small money or fake money, then you can go on to earn. And you can start focusing in on scaling up with prop firms, getting access to hundreds of thousands of dollars of real capital to trade with, and pulling in profits without the risk yourself. I've showed you the right way to view trading. I've showed you how to build a trading plan and how to test it by using a backtesting software. I've given you pretty much the exact step-by-step that you need to follow to become profitable in the next 12 months. If you want my advice on how to apply the LTVE system, I would say segment it into 3-month periods. Spend 3 months learning, mastering, and reverse engineering a system. Once you've done that, spend the next 3 months backtesting that system meticulously to make sure you can collect every single piece of information from it and make improvements as you go. And once you're happy with that system, move on to the next 3 months of validation, trade demo for a month. If that goes well, shift to a small live account. And now this is the phase that you might have to extend. So maybe things go great. Maybe you transfer your skills perfectly in just 3 months. But if you have 3 losing months or you have 2 losing months and then you start winning, just extend this period out until you're starting to see results. Because honestly, there is no reason to move on to the earn stage if you're still losing on demo. You're not going to make money, and instead of earning, all you will do is lose. So follow that plan, and if everything works out fine, in the next 9 to 12 months, you should be able to get funded and start making profits. And if it takes you a little bit longer, that's no worry anyway. You'll still get there a lot faster doing this than you will by wasting all of your time and energy with the shortcuts and signals and other bullshit that we've covered. So that's it. That is all that you really need to do to become a profitable trader. Go back to basics and follow this system from start to finish, and you will win.